Welcome to the Motley Fool's Crunch Time series, where we scout a single company from their story to their opportunities and risks. Today I'm covering Uber, the ride-sharing company. Let's start with the company's business strategy. Uber is a ride-sharing company. They match supply and demand for rides, but they have expanded beyond rides. They started with black cars, moved to much more common cars where anybody can drive for Uber. Now they've moved to offering everything from food to other hard goods. And that core business continues to grow at a solid clip. Over the past year, Uber's revenue has grown 18%, and I think that will likely continue as the core business continues to get stronger. But the real future for Uber is with autonomy. Autonomous vehicles provide an opportunity to expand the market and potentially even lower costs. The ride-sharing business is essentially a marketplace matching supply with demand, and if supply no longer becomes a problem because you have autonomous vehicles, that opens up much more opportunity to provide goods and services to customers. Autonomous vehicles could also lower costs because there's no cost for the driver, and vehicles can be custom designed to last longer and operate more efficiently than current vehicles today. The advantage Uber has in this market is they have already aggregated the most demand. They have far more market share than competitors like Lyft or like Waymo in the autonomous driving space. And so if they are able to bring multiple suppliers into autonomous driving, commoditizing supply, they should be well positioned to potentially 10x in size because of autonomy. So that brings us to the company's growth opportunities. I think the core growth opportunity is just to continue growing the existing business. Ride sharing continues to grow not only in the US, but all around the world, and so does delivery. Uber can continue to grow double digits with both of those businesses. That is just the core, and I think that's not going to go anywhere. But the real opportunity for investors is what comes from autonomy. This could potentially 10x or more the size of the market, not only for moving people around, but other goods. And it opens up markets and revenue streams that probably don't exist today, not only with people who don't want to ride with an unknown driver, but also with delivering goods that we simply can't deliver economically today. And Uber could be at that center of that growth opportunity. But like any business, there are risks. The first to think about with Uber is the reputational risk. That's where the company lost market share a few years ago when Travis Kalanick was pushed out as CEO. That is likely behind us, but something to consider for investors. There's also lots of competition. Lyft is the biggest direct competitor, but you also have Waymo in the market, potentially going to pass Uber in market share in San Francisco this year. Tailwinds that have driven the company's profitability over the last few years, like an increase in take rate, are also likely behind us. And the bridge to autonomy also brings new risks and new competitors to the market. Uber may not be the dominant player that they have been over the past 15 years. But what's my prediction? I think the opportunity for Uber is too big to ignore. That's an opportunity not only in the core business, but also with autonomy driving long-term growth. And Uber could be at the center of moving everything from goods and people around in an autonomous future. So to recap, Uber is a leader in ride sharing. They have aggregated demand. They are well positioned for core growth, and they have a lot of optionality to grow with autonomous vehicles. Now with the Motley Fool, your comments make us all smarter. So please comment with your own research about Uber and let us know what you want us to tackle next on Crunch Time. And of course, check out fool.com/invest to get the top 10 stocks to buy right now. Thanks for watching, everybody. See you here next time.